In June, I had my largest amount of dividend income so far. Also, I invested around $2,000 in new dividend stocks, with one of them being quite controversial. That's right, I doubled down and added to my AT&T position. So throughout this video, I'll explain exactly why I bought more AT&T and of course update you on the overall progress of my long-term dividend stock portfolio. My name is Zach, and you should leave a like and subscribe to the channel if you enjoyed the video. Before we start the analysis, I'd like to let you know that you can join a community Discord server and gain access to a spreadsheet showing my full portfolio if you support the channel over on Patreon. Link in the description. With that said, let's dive into the numbers. Since May 2020, I've gone from $32,939 to $63,908 invested. My current dividend yield on cost is 4.3%, and my compounded yield, which takes into effect reinvested dividends, is 4.49%. The differential between the dividend yield and compounded yield increased to 0.19%. This stat acts as a measurement of the snowball effect from dividend reinvestment. In this next chart, you can see how the value of my dividend portfolio has changed over time. My current value is $82,113. This has continued to rise with the market, which is nice, but remember, value is volatile, and the main goal of this portfolio is to build a source of growing earnings and dividend income for the long term. In this next chart, you can see my earned dividends to date. In June, I earned $295.39 in dividend income. This was my highest month yet. It's honestly pretty enjoyable to watch the dividends roll in. I got $125.91 from ExxonMobil, $27.64 from 3M, $25.37 from Chevron, $20.63 from PepsiCo, $10.99 from Kroger, and much more. However, the best part about dividend growth investing is that companies will increase their dividend payouts over time. For example, Kroger just had a 17% dividend increase. That's huge. Here you can see my cost allocation by sector. Consumer defensive is my largest at 25.8%, followed by communication services at 22.6%, technology at 14.6%, and energy at 14.6%. Not much has changed here since my last update, except a slight increase in my two largest sectors. All my recent buys were adding to existing positions at what I thought were a good value. I purchased 6 shares of Kimberly-Clark at an average cost of $128.91, giving me a 3.54% yield on cost. I bought 25 shares of AT&T at an average cost of $28.49, giving me a 7.3% yield on cost. Finally, I bought 10 shares of Altria Group at $46.93, giving me a 7.33% yield on cost. If you want to hear more about my investment thesis for these stocks, then you should check out all my stock review videos on each company. Both my Kimberly-Clark and Altria videos give great context and are still very relevant. Now let's discuss the elephant in the room, AT&T. For those of you who don't know, the company recently announced a gigantic move to spin off Warner Media and merge it with Discovery. We now know that the new company will be named Warner Bros. Discovery. This deal is expected to go through in mid-2022, and AT&T shareholders will receive stock representing 71% of the new company. I made a heavily detailed video explaining the entire deal and my initial thoughts on it, so you should definitely check that out if you want more details. The main problem people had with this news is that AT&T subtly announced that they would be reducing their dividend payout after the deal goes through in 2022. This made many investors angry since that was their primary reason for investing in the company. Also, management had just said after Q1 earnings that the dividend was safe. So after the news, many people sold and the stock price decreased. Recently, I put out a poll to see what my audience did with the stock. 5.1 thousand people responded, with 23% saying they sold, 36% holding, 10% bought more, and 30% never owned it to begin with. The common thread among negative comments was that they lost trust in the management. While I get that, I can't help but think the companies are both way better off after the deal. AT&T is now more focused on the communications business with decreased debt and increased ability to invest in future growth. Warner Bros. Discovery is a much stronger media company when combined and has an improved shot to compete with the big dogs Netflix and Disney. Honestly, I should probably buy way more if it keeps going down. Over the long term, I see this deal as value creation. The only negative I see is the dividend cut, but that's not a deal breaker for me. Thank you for watching Dividend Data. I greatly appreciate if you could leave a like and subscribe to the channel. If you follow me on Twitter, link in the description, you can get real-time updates on my buys and dividends coming in. Also, you can follow me on Instagram at Dividend Data. You can support the channel over on Patreon, where you can gain access to my community Discord server. The link is in the description. Please leave a comment below, and thank you for watching.